Thank you very much for joining. So 20 minutes for a session about analytics. That means that I need to annoy you very much with a lot of data. So we're going to be looking at data almost since the beginning. So I'm going to show you a ton of analytics, a ton of data, blockchain, on-chain, derivative that are going to sort of challenge some of the conceptions that we have about crypto assets. A little bit about myself. I'm a computer scientist by background. I teach applied AI at Columbia University. I have a history of building high-scale systems both in Wall Street, quant systems, as well as Microsoft. A couple of exits as an entrepreneur and a very active investor in the space. And about a year ago, I started this company called IntoTheBlock that is a data science platform for crypto assets. So if you don't know IntoTheBlock, these are some of our customers in less than 4 months. So exchanges, like you can recognize some of the logos, data providers, big tech companies. The adoption is being off the charts. I have a little announcement today. As of a few minutes ago, our data or analytics are in CryptoCompare.com. These guys have done a tremendous job bringing some of our initial signals to life and to their audience and sort of pushing us to sort of execute in the vision that they have. So great team, I'm very proud to partner with them. That's all you're gonna hear about us. So we're not here to talk about our company, we're here to show you data. So a quick agenda, the first 3-4 slides, I'm going to try to brainwash you and try to come up with a thesis, prove a thesis that crypto requires a new form of analysis and why. And the second part, I'm just going to show you a ton of metrics and a ton of data and analysis and see what you think. So let's start with an obvious statement. Crypto is a new asset class with new fundamentals that requires a new type of analytics. That seems like a very stupid thing to say because every financial class in history has come up with their own set of analytics. So stocks gave us price and volumes, currencies 24/7, markets, commodities are based on supply and demand, and so on and so forth. So crypto assets are only a 10, 11-year-old asset class, but in terms of data generation, it's one of the richest asset class in history. I think Philip from Chainalysis was referring to this in one of the panels this morning. So there is a lot of data that we haven't seen before, and that is conducive to very unique insights. So it's also the first asset class that records patterns of individual investors in public ledgers. So that's a gold mine. We don't have that anywhere else. But if that's very unique, why do we keep doing this crap, right? Every time that we come out, that we talk to trading firms, they're all diving into technicals, and technicals are fine, but just looking at technicals and nothing else and ignoring the rest of the data sets for crypto is just being lazy. Like, why wouldn't you look at that if it will complement your technical analysis? So crypto asset requires a new form of analysis. It's going to create new factors. It's not going to go momentum, value, carry, like the famous French factor theory. It's going to be other things that are very unique based on blockchain data, based on on-chain data, based on 24/7 on-chain data, based on derivative products that we never seen before. Make sense? Cool. So how does that look like? So imagine that you're looking at exchange data and that brings traditional factors. This is what I was alluding to, famous French theory, value, momentum, carry, volatility, or popularity, other things. But then when you look at on-chain data set, that brings new factors. And because we're living in the golden era of data science, a lot of the research from the 70s, from the 80s is possible today. IntoTheBlock wouldn't have been possible 10 years ago. It would have been too expensive. So the type of neural networks that we're building, they're just not possible before. So what I want to do now for the rest of the presentation is just show you data and see what you think about some of the analysis. So here's a question. How many traders, active traders today, do you feel they're making money with Bitcoin? The people who are actively trading. 50%, 70%, 30%. So 30, 20. So this is an analysis, look up below, 38. So this is an analysis that we call in and out of the money around the current price, that it looks at active addresses that are actively trading everything that has been recorded on chain and uses a clustering model to partition that in 10 groups, depending on whether they're making money or losing money compared to the current price. Do you see that value of 7,900 to 8,100? I mean, it's hard to read. You know what that is? That's a level of resistance. So for Ethereum to go up, it has to break through that 1 million and a half to and a quarter of addresses. So there is a ton of resistance there. So how does it look for Ethereum? I'm sorry, that was Bitcoin, my bad. So how does it look for Ethereum? There is 646 addresses above between 193 and 199. That's a level of support. So if the price of Ethereum goes down, part of that volume is going to be in place and it's going to press for those prices to stay. You can do that with crypto because you have access to on-chain data. You cannot do that with anything else. So how is this helpful? It gives you pragmatic levels of support and resistance. It gives you ideas of investor sentiments. If you see those red bubbles increasing, that's a negative sentiment. And it gives you an idea of counterpart. If I'm going to enter a position at a certain level, that gives you an idea of who is on the other side. Make sense? So that was active. That's today. How about all time? How does that look like? So if you look at Bitcoin Cash, it was a fork. We all receive Bitcoin Cash. It's a party, right? 92% of investors have made money with Bitcoin Cash historical. That big green bubble, that's Roger Ver and everybody else in that group. But if you look at Ethereum, very different, only 52%. Because the price has come down over time from the arena, from price zero to all-time high. The same analysis. How is that helpful? Well, it gives you ideas of accumulated volume. What are the positions that have volume that are unique? Movements in inactive tokens, as well as where are the large token holders, the whales positions. Here's another question. How regularly crypto changes hands? So how regular are coins that are not moving, that are dead? How regularly does crypto changes hands? So this is an analysis that we do based on UTXO transactions. And it will tell you coins that are older than 5 years that haven't moved, younger than 1 day, right? And you can see how those spectrums shift and how that correlates with price. So this is Bitcoin, this is Litecoin. Look at that bracket of 1 month to 3 months and the correlation with price. It's ridiculous. So you're seeing when some of those coins that haven't moved in a while start moving, and some of those spectrums start enlarging or shrinking, how that affects price. Does that make sense? Cool. So how is this helpful? You can see accumulation trends. Where are coins just staying there and not moving? Are they actively traded? Movements from inactive coins to active coins, as well as holding trend analysis. So when you look at a crypto asset, it's helpful to understand who owns this thing, right? And a vector to understand who owns an asset is time. So are people in it for the long term, or are people actively trading? This is an analysis on Ethereum that we call ownership by timing, which we look at addresses that are actively trading and are younger than a month and how that trend behaves. Addresses that are older than a year, and we call those holders, and somewhere in between. So every time there is a price movement. So this is Dash with one of our customers. By the way, this is Dash on the price spike of a few months ago that went up 16%. You see that the orange bars spike because there are new addresses coming in and actively trading. So you can pay attention to those things. How is that helpful? It's a momentum indicator. So people talk about momentum in price. How about momentum in the network? New addresses coming in that are actively trading. Every price rally has that characteristic, as well as investor sentiment. How much concentration exists about a crypto asset? This is a little bit polemic. So one analysis that we look at to try to understand who owns an asset is concentration. So we look at whales. So the case of Bitcoin Cash, there is about 5.2% of the network that is owned by whales. So we look at dimensions, or these whales trade and they move the price, or they just passively hold. So whales are long-term investors that are not exchanges and all that. This is a position that sucks, Chainlink. So it's still highly concentrated, great token, great project, but it's still highly concentrated, which means there is a ton of vulnerability there. How is this helpful? It gives you idea of mass selling risk and accumulation parting. If those people dump, what happens to the price? Money flowing in and out of exchanges. I just had a great debate about this. So imagine that you can look at the blockchain. So you see every analytics vendor in the space gives you an address count. Yeah, the network is growing or shrinking. That's one of the most misleading charts that you can look at. I'll tell you why. Not all addresses are created equal. So my wallet address should not weight the same as Binance's hot wallet, should not weight the same as Bitcoin.com and one of the big wallets in the market. So we spend a lot of time training machine learning classifiers to look at the blockchain and try to identify different addresses and classifying as if they're part of an exchange or not. So this is like looking into the brain of the model. The one to the left is Binance, the one to the right is Poloniex. So you can see the hot wallets, the cold wallets, the deposit addresses, the withdrawal addresses. You can see that Binance has a single hot wallet, and all the transactions are grouped in groups of 100 going into Binance. Poloniex has 2 hot wallets. One receives all the money, one does all the withdrawals. How is that helpful? Well, many things. Instead of giving you an address count, if I know that's an exchange or a miner or an OTC desk or a DEX, I have semantics to understand that analytics, right? But here's something interesting that you can do. Inflows and outflows. So money coming, this is all exchanges, money coming into exchanges. Inflow volume is green, outflow going out. And you can see how that correlates with price. And then there is an index that we calculate that is a correlation between the two. That's all Bitcoin. That's Binance. Look at that. All Bitcoin, Binance. All Bitcoin, they're identical. So the flows on Binance are highly correlated with the flows on Bitcoin. When you look at something like Kraken, it's all over the place. And those gaps tell you that there's more money coming in, so there might be people dumping and might correlate. So you can see the spike in green and the price dropping a little bit. So patterns like that are super interesting to look at. So imagine how much money would you pay as an equity trader to know how much money is coming in and out of NASDAQ. I mean, that's crazy. That's a gold mine that we can exploit in crypto that is difficult to exploit anywhere else. So you can anticipate large positions. There's 5 million that they just flew into Bitstamp, but somebody's going to do something with that. Right, as well as quantifying risk levels. So months ago, Chainalysis published a study that I like a lot that correlating the order books with the flows on exchanges as a level of risk. And it was, look, the order books the spread keep increasing and the inventory on chain is the same. So that is an interesting indicator of price manipulation. How are crypto traders geographically distributed? If you're in London, or you're in the middle, but if you're in Beijing and you're trading an asset, how exposed are you going to be? This is an analysis that we call the East versus West, in which we use some heuristics like the exchange that the transaction came from, the time of day, other things to try to estimate. It's not exact. If a transaction happens in Asia or somewhere else in the world, and we average that over time, so you can see Ethereum is very balanced. But if you look at Litecoin, you can see it's predominantly Western. You're a Litecoin trader in Shanghai, that's your exposure right there. That's a trading that happens when you're sleeping. How is that helpful? You can understand geographies. We're trying to do this for different continents, for different countries. It's brutally hard, but some of them is possible, as well as you get some level of exposure to geographic trading patterns. Are exchange order books realistic? We know the answer to that, but it's a really hard problem to crack, and we don't have a solution. So what did we do? We created this analysis called on-chain exchange analysis that is a market depth, like a normal market depth, from a blockchain exchanges, but on top, it tells you the inventory that is on chain at those levels. So you're looking at the bid of Bitcoin at 8,700, whatever, we can tell you how many Bitcoins are on chain at that level, approximately. And you can take that more granular to actually do it by exchange. So that's super interesting. So how is this helpful? Again, going back to that study I mentioned, you can start correlating order book with exchange positions to look at risk and price manipulations. Make sense? Yes? Anybody confused? No? Cool. So there are a ton of challenges that are fascinating. I think the biggest challenge in analytics today for crypto is the anonymization. Back to the example I use of exchanges. If everybody is the same, you're going to have semantics analytics. You don't know how miners behave. You don't know how exchanges behave. You don't know how OTC desks behave. So having a level of understanding of that, it gives you another level of abstraction that you can qualify that analysis. transfer patterns identification, so malicious actors, or just patterns, like every Tuesday at 5 p.m. there is this amount of money going into Binance. And this is what happened with price. Price predictions is always a crown jewel of this type of thing. And exchange fake volume detection, very, very hard to do. Very, very difficult to do. We're working on all of that. We're a team of data science, hackers, machine learning experts, PhDs in math that love this stuff and are trying to solve these problems. To give you an example, very soon in the IntoTheBlock platform, you're going to get, and through some of our partners, short-term prediction models. This is nowhere near ready, but we have been working for it in 5 months and came up with a series of deep neural, and it's not only us, it was a collaboration, came up with a series of neural network models that are hitting price-by-price predictions with 70% accuracy. And I know you heard that before, so I'm not here to convince you. That chart there is testing with real-time prices for the entire year. So, and it's consistently hitting. Today it was 74%. So, and it's like a massive neural network, 52,000 parameters, an ensemble of neural networks. You're gonna see some of that if you're in the IntoTheBlock platform, or you're one of our partners like CryptoCompare. And like that, we're trying to go after some of the biggest challenges in crypto. So, what did we discuss? Crypto assets are a new asset class. You cannot analyze it like a traditional capital market. There is way more data. The biggest differentiator are blockchain data sets. You cannot only analyze blockchain data sets because there is way more trading happening on exchanges. There are derivative contracts, but blockchain data sets are a very unique asset. And a lot of the insights, that same thing that I show you for price predictions was not possible 5-6 years ago, because the technology was not there. There weren't deep learning frameworks like TensorFlow, PyTorch. There weren't GPU instances in AWS that make this cheaper. There wasn't any research in quant financing in this area. So this is something that we can do today that we cannot do before. So that's all I have. With that, I would like to open for questions. If you want to email me, that's my IntoTheBlock. I write every day on Medium about AI or crypto, so just shoot me a note through my Medium channel. And what happened there? Questions. Is monitoring the number of on-chain transactions for different blockchain a good indicator of demand? Yes, but with a caveat, right? Many caveats, actually. Yes, so transaction activity is important, but keep in mind that exchanges do a lot of manipulation internally. They move money around all the time. So what transactions are really trades versus transfers versus me moving money from an exchange to my wallet or vice versa. And so discriminating that is important because it could be misleading. And then the other thing is that trying to make predictions with a single attribute is a fool's errand. In quant, we call that power factors and are like a unicorn. It doesn't exist, right? In crypto, so those people that say this number is correlated to price, that's BS. I mean, stay away from that. Those predictions I show you use 78 factors to try to make a prediction, and even then we miss quite a bit. Do you think realized cap is a valuable metric? Oh, man. No, I think we need better metrics for quantify market cap. What we have today is bullshit, literally. So we need realized cap is interesting, but in order to do that, you need to do all that discrimination that I mentioned. Discarding fake volume, that exchanges don't like that. Discard the movement in exchanges and other things that are not related to trading. No more questions. Any questions from the audience? Two more. How many crypto assets do you have data for? Over 713 tier 1 blockchains. We add 1 blockchain a month, give or take. We miss it sometime. About 13 blockchains, about 700 tokens. Well, thank you very much for coming. Enjoy the show.
Thank you, Jesus.